Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for Monday, March 13th, 2017. We're covering the crude oil futures market, so let's take a look at the monthly chart. This is the crude oil monthly chart, and before I begin, I'd just like to talk a little bit about trend lines. I use trend lines sometimes, not all the time, but I just wanted to show you this because I noticed it myself. So this chart goes back to 1998. I'm going to take this low down here and just take this low and take it to this next low right here and just see where it winds up as we zoom back out. You can see that when it came down here, that was a pretty accurate touch right there. Let me zoom back out and see if it's affecting us now. Well, it seems to be wrapping right around this trend line, doesn't it? It comes down here, didn't close below it, had support, finally breaks through it, gets support, can't close above it now. Comes up to it again, can't close above it, finally breaks above it, stays above it a couple of months, now it's breaking down again. So I just found that interesting. Well, it looks like we've come down in 5 waves, 3, 4, 5, and that this would be a correction. I was originally thinking an ABC correction, and that would bring us up to the 63, 65 area up here. Now, I don't know exactly what we have here. This doesn't look like a C wave to me. It certainly could be though. And on the monthly chart, it does kind of look like a bear flag, doesn't it? This is the weekly chart. We certainly have more room. We could go down on the stochastic. This could be an area of support here from this trend line. Also has the 80-week period moving average at the same area. Again, I thought this was going to be an A, B, and I was expecting it to come up here for C, but this simple pullback got quite complicated. Again, this is looking very much like a bear flag. Now, there's a lot of scenarios that could be happening here, most of them pointing downwards. The only thing that I want to warn is that if this was an A wave and we had a complex B wave where it was something like this, 1, 2, 3, 4, 5, then we would be looking for the B wave to end here and then it come up into this area. But that is probably the least likely scenario, but it is a scenario that I've been watching, and so I just want us to be careful. Now, this has been the tightest, longest trading range for quite a long time. This was much wider trading range. That was a wider trading range, I believe. So this initial move out of here is, I believe it's long liquidation. So this could certainly carry on further to, I don't know how low it could go, but this could just be a liquidation break. The last time that we had a tight level like that, you see how far it broke. The time before that, you can see that it broke really hard. I don't know how well you can see the screen, but you can see all this trading happened up here. It was trying to push higher, trying to push higher, trying to push higher. And once it failed below here, then all the longs had to get out. And so you had this big down day right here. And I believe, I don't know this for sure, but I believe that this is long liquidation. That people are getting stopped out of their positions and they're chasing the market to get out of their positions, because this was quite a long period of time. So there was a lot of positions that gathered up in here. Now, these are the last 2 days, Thursday and Friday, and what I am not seeing down here is I'm not seeing rejection, and rejection would look like a big spike down and then immediately rejecting that area and then continuing higher. So the 3 things that I see that are happening here is the long liquidation, that's one. Number 2, we don't have rejection down here. We have acceptance at lower prices. We could certainly be testing lower next week. Now we have this very thin area up here, and we may have come too far too fast. So again, it could go higher or it could go lower, but it could go higher to fill in this area in here, and it could certainly go lower because prices have been accepted at this lower level. So real quick, on Monday, I believe at 10 a.m. is labor market conditions. Tuesday at 8:30, that's a pretty big deal for, at least for the ES PPI. That's 8:30 a.m. Eastern time. Wednesday is going to be the big volume day for both markets, the CL and the ES. The FMOC is going to be meeting and talking about rate changes, and of course the oil inventories is on Wednesday. So in the past 4 days we've gone down 10%, and depending on how you count this, you know, is this 5 waves down, 4 waves, 5 waves? You know, it could be 1, 2. You know, this could be 3, this could be 4, 5. Not really sure at this point. It does look like it could go lower, but even if this was the 5th wave, it could pull back, and the B wave could be lower than the 5th wave. So we do have acceptance down here, certainly not rejection. So the market may test lower next week. Again, the past 2 days are fairly balanced, and even though this move may be a long liquidation, they may have pushed it too far too fast. So watch for a recoil or a pullback or a bounce. Just notice down here between, I guess, 48 and 4650 is a low volume node, and it could either stop at that low volume node or it could shoot through it fairly quickly. So if it gets below 48, it could slip down to 47 quite quickly. And this could also be an area of support here. I have that from 46.75 to 47.25. So just looking at a little bit, this could be an area of support from this trend line here, and that is around 45.50. That's on the weekly chart. This low volume node here coincides with this Andrews pitchfork here, and that is around $46, $47 ish. On the 4-hour chart, there's just this low volume node here, and also kind of coincides with this Andrews line extension, and that's down here around 46.50, and that's what I have on the downside. So what am I going to be looking for on Monday? Number one, can we get acceptance above here? If we can get acceptance above here, it could fill this area in rather quickly. Another scenario, it's a closer look, another scenario is that if it gets above here and there's rejection up there, then I'm going to be going short. I'm looking at this high volume node here, and if we make a run up to it but cannot reach this high volume node, I'll probably be trying to get short and take it down to the low. If we come up to this high volume node on 2 or 3 swings, and each swing is lower volume, lower momentum, I might take a trade up here. We'll see with my stop on the opposite side up here somewhere. If we open up below this level and peek inside the level but can't get acceptance, I'll be probably trying to get short. And if we open up below here and we do get acceptance, then I'll be looking to get long up to the HVN. Bottom line, I don't know if they've unwound all their positions yet as far as the longs go. This is not rejection, so I expect lower prices, but it may bounce first. It may have gone too far too fast, and it may bounce first. And it certainly has a lot of thin area above us. Every move down was really a sharp move down, so all those areas could be filled in before it decides to go lower. Well, that's what I have for now. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis of the market in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, comments, and shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.